What's good, everybody? It's your boy KG, London, aka the London Session Specialist, aka the Wolf of all streets. And today it's FOMC, which happened at 8 o'clock. It's now 12 minutes past 8. And yeah, so in the morning, I sent a trade setup on Euro USD, right? So I was still anticipating Euro to Euro USD to drop to the downside, meaning I was still anticipating a strong dollar, right? Still anticipating a strong dollar dropping to the downside, right? Mainly because of we hit a key level and then we broke structure on the H1. Let me just do this so that you guys can see. I mean, we hit a key level right here and then we broke market structure, right? So this is a breakup block. So still anticipating price to just hit here and then continue dropping to the downside, right? So unfortunately, this was a failed setup, right? So I took my L today. I took a loss because I had my entry here and then my stop loss just above here, anticipating to drop to the downside, right? So some of my members took trades here early before me, which happened in the AMs, meaning they had their pending orders right here, mainly because of the breakup block, right? So once price dropped down, they adjusted their stop losses, and we'll drop to the 15 minutes. I'll show you guys something. But one of the most important things that I want to talk about now is uh whenever you see me sending a trade setup like these, right? You need to understand that this is more like a roadmap than anything, right? So understanding every key thing that's highlighted here, it's very, very, very important, right? So something like this, PDL, right? Meaning previous daily lows, right? So what happens at the previous daily lows or previous daily highs? What happens there? So these are our targets. One, these are more like targets, right? And then two, these are reversal points, right? So you can target them. Price can also reverse when it gets to them, right? So understanding that is very key because whenever you see price reversing, you won't even be surprised because you understand, oh, damn, they took out a previous daily low. And, so this is what happened. They went to our entry point. They hit our entry point. They dropped down, took out a previous daily low, and then they came back inside of the range. You understand? So it was basically internal range liquidity to external range liquidity, and then from external range liquidity back to internal range liquidity. So we sent out two of them. So this one ended up being a loss on my side. I'm pretty sure people who saw the setup and just went straight into taking the trade also took a loss with me. So it's just another business expense day for us. Nothing hectic, nothing major. So there's another setup that I sent, but this one I didn't post it on Instagram. It was only for the group. So what happened is we're anticipating price to okay, this is S&P 500. So we just anticipated price to go inside of this FVG, fill in the FVG here, right? So meaning this high is protected. So we just wanted to see price uh rebalancing, right? And then breaking market structure on lower time frames. And then we wanted to like catch some sort of a pullback, right? So your entry is valid only when exactly. Your entry is only valid when it reaches there. And then again, just anticipating, we do have FOMC. So remember, fundamentals only drive price to its intended direction, right? So if price is going down, the direction is to go down. FOMC will push price down, right? Unless if there's some sort of liquidity up there, they want to go collect liquidity before going to the downside. That can also happen, right? And that's the danger of trading fundamentals because sometimes you're not really aware of the liquidity and they actually go for that liquidity first before they take the intended direction, right? So that's very important to understand. So now we'll just go straight to our charts. So this is the dollar index, right? So this is the dollar index, and I'll start on the monthly time frame. So on the dollar index, I'm still bullish on the dollar index, right? Coming for this equal highs right here and then filling in this gap right here, right? But I do understand that this is a monthly candlestick that we're looking at, or a monthly chart, if I can put it that way. So for this week, I was still bullish, to be honest. I was still bullish with this candlestick, right? Hence, I just wait for it to open, to drop down, and then I was anticipating price to push to the upside, right? So, but again, I didn't have a key anchor point for this week, to be honest, right? On the weekly time frame, I didn't have a key anchor point from the weekly time frame. I didn't have that, but I just leaned towards the daily. I was just leaning towards the daily time frame. And me leaning towards the daily time frame, I saw this FVG here aligning with this breakup block, right? So yesterday, what happened is we hit them, meaning we hit a key level and then we reacted, away from the key level. So that's why today I was anticipating price to push all the way up, right? Meaning strong dollar, right? Hence, I wanted to sell, hence I wanted to sell this. Hence, I wanted to sell this guy in here, Euro USD. Hence, I wanted to sell Euro USD, right? So I was anticipating that, okay, same thing happened to Euro USD. We had a key level here, and then we hit a breakup block here. So I was still anticipating price to drop all the way to the downside, right? So unfortunately, there's liquidity that I didn't see, and they went for that liquidity first. But when we're dropping to the 4-hour time frame, this is what we were getting. Right, so based off yesterday, this is what we got, right? So I was still anticipating price to go up, because even on the lower time frame, I was seeing this as a nice key level where we opened, dropped inside of a key level. So I was still anticipating price to go higher, right? But what happened was we took out a previous daily high, right? So again, what happens at previous daily highs and lows? Price can reverse at any given time. So if you can look at above what's resting above, it's a breakup block, right? So it is a key level. It is a key level. I won't lie. I won't lie. So, but mostly whenever I have key levels that are, if I have liquidity that I'm targeting, let's say I'm targeting this liquidity up here, I don't really pay much attention to these key levels, because I understand that price is most likely to, okay, I see them as low resistance liquidity, because I understand it's low resistance. I'd be anticipating price to do something like, smash it, right? And then come back, use this as a key level, and then continue going to the upside, right? So meaning they going to, disrespect it now so that they can respect it later. So that's how I move with these key levels, especially if I have a low resistance. But what happened today is they took out liquidity at that key level and then went straight to the previous daily low. So again, it's FOMC, it's fundamentals. So anything can happen, but the direction will forever remain the direction. So liquidity will also remain liquidity, right? So they just came through for this liquidity and then just rebalancing price. Sorry. So they just came through to rebalance price here. And then it seems like now they want to push to the upside again, right? So I'd say something again. One would say you didn't wait for market structure to break. Yeah, I don't really, I have, certain things that I lean towards. So every time I just see price closing above here, I consider it a structure break, right? If price closes above, I consider that a structure break, which actually happened right here. So if you can put this here, right, we closed slightly above, right? So hence I was still anticipating price to push to the upside, which it did, took out liquidity and then came back to the downside. So dropping to the 1 hour, Okay, so I'm also not trading FOMC, mainly because I took a loss earlier, right? So once I take a loss for the day, I'm done, right? I can only afford, a certain limit of my business expenses, right? So once I reach a certain limit, I'm done. The business is not purchasing anything anymore. So seems like we just came through, hit a key level, and then now we're still pushing to the upside, right? So remember, we have two parts of FOMC. It's the 8 o'clock one, and then we are gonna have the 8:30 one, right? So this is a 1 hour candlestick. Let me drop down to the 15 minutes. And on the 15 minutes, I don't know which key level is suitable. I don't know which key level is suitable, but price might just, within the next 15 minutes. I mean, if this one is gonna close like this, it's gonna form a VG here. So we have, multiple points of interest. We have multiple points of interest, but I think if you wanna get like a proper one, it would be to just pull up your fib just note your premium and discount levels. So where you anticipate 50% to hold price. So anyway, above around this level, maybe we could see something like, price coming inside, hitting this level, and then, start continue going to the upside. So that's what I'm seeing right now. And yeah, man, and yeah, so I'm still bullish, guys, on dollar. I might be wrong, but I'm still bullish. So I'll go to Euro USD. So this is the Euro USD that I took a loss on earlier. Right. So I wasn't really expecting price to push all the way up there because I thought, high of the week is in, right? Because once I get high of the week in, I'm looking for price to just, start dropping because high of the week is in. So, but unfortunately that didn't happen. So I took my loss here with my stop loss just above here. So I was anticipating price to drop all the way going to the downside, but it seems like we just swept a previous daily low and then we continued going to the upside. So I'll drop to the 15 minutes time frame just real quick. So this is also the order block that I was anchoring using, right? This is the order block. So I took my trades here with a stop loss above here, and then I just left my trading station. So what happened is price went down, took out the liquidity, grabbed the liquidity, and then it pushed all the way up. So it hit me with a stop loss. So some of my members took the trades here, high of the day, utilizing this. They got high of the day and then started dropping. So you could adjust your stop loss. And some people, if you took your trade here, you could have adjusted your stop loss before it actually came back, right? So that's the beauty of trading the ICT way, because you understand where price reacts, right? Or where price should react. So these are the key levels where when price gets here, you are most likely going to see a reaction. But once price leaves there, it can go hit another reaction point and then it can go against you, right? So, but once it hits your reaction point, when it moves and goes below a structure low, you can adjust the stop loss so that when price comes back, it can kick you out and at break even, right? So with this one, we went all the way up, just like the dollar index there. So let me just show you the 4-hour structure. So looking at the 4-hour structure, we do have a breakup block here, which is, close to our order block. So what happened is we went all the way up to got a previous daily high, hit an order block. So now we came back. There's order block, there's FVG, hence we're getting this reaction and price didn't really violate this, right? So if you were a bot around these two areas, you're just gonna grab this reaction. Is it still going all the way up? I don't know. I'm not sure. But looking again on the 1-hour time frame, it's going to depend. We only have 4 minutes now. Let's see the second part of FOMC. So I don't know. I'm still anticipating it to drop to the downside because now you can see that it hit a key level, and I'm anticipating price to still go to the downside. 15 minutes. Yeah, so this one on the 15 minutes time frame, when it closes, leaving a gap or fair value gap, a VG here. So again, I think this area, because remember, this is a order block, right? Price went all the way up and then price failed to hold, right? So this is the original, support becomes resistance kind of chat, right? So now I'd anticipate us to hit here and then drop. So even if I see this kind of setup, I don't want to take it because, again, I've exceeded the business expenses because now I see these two areas here as liquidity, sell side liquidity. So this is what I'm seeing hit here and then continue dropping to the downside. So we can drop lower for cable. Can drop lower for cable. Sorry, let me just do this. Yeah, so there's a lot happening on cable, but I don't know what's here, but it's definitely a key level. We hit a key level of, I don't know which time frame, but let's just, oh, okay, it's the monthly time frame. So it's the monthly rejection block, right? We hit a monthly rejection block. If we drop to the weekly, and also there's a SMT divergence in play, guys. You know, there's SMT divergence in play. What's going? Oh, I'm on the weekly time frame. What? I should drop to the daily. That's what I was supposed to do. Yeah, so this is a weekly, monthly key level. So what happened is we took out liquidity here, anticipating it's from a previous week, old week, and then there's more liquidity that we took here. So we hit that level. And then from here, we add a tricky point, guys, you know. We add a tricky point. So it's all gonna depend on the dollar index. You know, it's all gonna depend on the dollar index. But I think how things are looking right now, they still wanna drop lower. They still wanna drop lower. So again, we do have a divergence, right? If you can see here, I marked equal highs, right, which is liquidity. And we do have an SMT divergence, mainly because of, look at today's high. We didn't take out yesterday's high, right? But we took out yesterday's high on fiber, right? So we do have a divergence, right? So we do have the divergence. So we could see price still dropping to the downside, and there's like a minute left. So again, even with this one, like, you know, I still think we're still pushing to the downside. So we have this gap here. So I'll just take the bodies. We have this gap here. So this order block was supposed to hold price. This breaker block was supposed to hold price, but you know, it gapped up. So now if we closing again, same as the other one, if we're closing right here like this, we might just see them tapping inside, closing the gap, and then pushing to the downside, right? So people who are trading the QM fractile, the Quasimodo, will say, okay, I'm seeing a QM fractile. Or those who are trading head and shoulders, they'll be seeing head and shoulders, but to the downside. So another setup that I sent was uh was this one, which kind of like, you know, went well. That's this one, right? So where we said we were anticipating price to hit to fill in this gap and then drop to the downside, and then everything is protected above this high, right? So this high, everything is protected, right? So wanted to see market structure breaking, but that didn't happen when we tapped inside of this, right? Because if we tapped inside of this, we would have anticipated this, right? We would have wanted to see price coming in and then take the sell and then continue dropping to the downside, but we didn't see that happen. So we just waited for them to do that. Even here, they just respected up until they went all the way up. They started dropping. And then once they took out this low, that's when you could have said, okay, now we broke structure. Or even this one. So from here, you could say now they broke structure, and all you need to do is look for an FVG, which is right here. Looking for an FVG, which is right here. So this one was valid for an entry, but again, I took a loss earlier, so I wasn't really interested anymore, mainly because of what was happening. So you can see now we dropped to the downside, but now it's the second part of FOMC. I was still anticipating price to drop all the way here, but it seems like it's going to push all the way to the upside, or it's just retesting. I don't know. I do not know. So this is the Nasdaq. Nasdaq also, it hit here, started dropping to the downside, but you can see that there's a there's a divergence happening because US30 is not in sync with the other two, right? US30 is just doing its own thing. It's just doing its own thing. So there is no, you know, intermarket analysis that's in line with each other. Yeah, so it's the second part. So let's just see what's happening. hit a key level, and then probably drop to the downside. I'll take it further and go to the M5. Yeah, just need to wait for it to play out. Just gonna have to wait for it to play out. This is the DXY coming inside of that level. So on the 1 hour, we just have this long wait. Also, since I like using divergences a lot, guys, like I can utilize this as well. Sometimes, I just need more confluence. I mainly look at the divergence, not, the overbought and the oversold. I don't look at those. I just look at a divergence. If there is a regular divergence, which symbolizes there's a reversal playing out. So once I see something like that, I just use it as a confirmation tool. All right, I just use it as a confirmation tool because one of them is something like this, where price is not symmetrical. So let me hide this thing as disturbing me. Yeah, proper. So if you can look here, price is not symmetrical, right? So look at here, making a lower low, but this one is making a lower high, right? So this is a quote unquote reversal type of thing happening here, right? So you just need to wait for market structure to break and then get a key level and then trade from there. So it seems like we hit that key level and then now we might start pushing to the upside. Drop down to the M5. Okay, I don't think it's done. It's still gonna come down to the downside. Yeah, so this is basically how we trade, but obviously fundamentals are always going to be tricky. I mean, because of they bring in volatility, and if your technicals are not right, you're gonna get it wrong, unfortunately. If your technicals are not right, you're gonna get it wrong. Mm. Okay, so I'm just gonna pause it for now. I'm just gonna pause it for now, and then I'll continue with it later. Let's give it let's give it some time to do its thing, and we'll take it from there. Let's give it time to do its thing, and then we'll just see. But they're looking bullish, looking like they're going to the upside. Yo, USD is just doing its own thing. Yeah, so let's just give it time, and then I'll continue with the replay. So time has passed. So we got that reaction here, and price is pushing to the upside, right? Price is pushing to the upside. Right, so that fair value gap worked for the key level, worked. Price is now pushing to the upside, so meaning it's still bullish. And let's go to Euro USD. Yeah, so Euro USD, same thing is kind of like happening. All right, so that FVG that we spoke about and the key level, price hit there exactly. Now we push into the downside, targeting the sell side liquidity. And cable is doing the same as well, we just hit rebalanced here and then also pushing to the downside. So let's just quickly check S&P 500. Okay, so S&P 500 also the same thing. Seems like we're still pushing to the downside. So again, I don't want to make this video long. Yeah, so just stay tuned for more, guys. Just stay tuned for more. And also the 25K challenge that I'll be recording live, doing, taking live trades and everything. It's still coming. It's still coming. I'm still gonna do it. The account is there. The account is ready. I just haven't taken any trades yet. I haven't taken any trades yet. So I was trading a different account. Trading a different account. So yeah, please comment, like, subscribe, share, all those things that you need to do on YouTube. So this is it from KG London.